burying your life savings in your backyard, and then forgetting exactly where. That wasn't rare. That was normal. For most of human history, there was no bank to call, no app to check, no vault with your name on it. If you had money, you were the vault. And that meant thieves, fires, floods, and your own bad memory were the only things standing between you and total ruin. So how did people protect their wealth for thousands of years before a single bank existed? The answer involves temples guarded by priests, goldsmiths who accidentally invented modern banking, and one king's decision that changed money forever. Let's go back. Money is only useful if you can keep it safe. That sounds simple, but for most of human history, it was one of the hardest problems people faced. Cash, whether it was coins, grain, or precious metal, was heavy, visible, and impossible to track once it left your hands. There was no ledger to check, no password, no customer service line. If someone stole your gold, it was just gone. If your house burned down with your savings inside, that was it. There was no insurance, no backup, no forgot my PIN button. And it wasn't just about theft. Without banks, there was no safe way to save for the future, lend money, or move wealth from one city to another. An entire economy, trade, taxes, inheritance, depended on people solving this one basic problem. Where do you put something valuable when there's no safe place designed to hold it? People got creative and a little desperate. The most common method was the simplest: burying it. Archaeologists have found thousands of buried coin hoards across Europe and Asia, some from families who never came back to dig them up, likely because they died, moved away, or simply forgot the spot. That coffee can, the backyard instinct is thousands of years old. But wealthier people and entire societies needed something more reliable. That's where temples came in. In ancient Mesopotamia, Egypt, Greece, and Rome, temples functioned as some of the earliest banks on Earth. Why? Because temples were massive, heavily built stone structures, staffed full-time by priests, and crucially, almost nobody dared to rob a god. The fear of divine punishment did more security work than any lock. Records from Babylon show temples storing grain and silver, even issuing loans with interest, as far back as 2000 BCE. In ancient Rome, wealthy citizens often deposited valuables with trusted moneylenders called argentarii, who kept records and helped with currency exchange. And across the medieval Islamic world, merchants developed letters of credit called sak, the root of our word check. So traders didn't have to physically carry gold across dangerous trade routes. Still, for the average person, a hole in the ground, a hidden floorboard, or a trusted neighbor was often the best option available. The real turning point came from an unexpected place: goldsmiths in medieval Europe, especially in England during the 1600s. Goldsmiths already owned strong, secure vaults. They needed them to protect the gold and jewelry they worked with. People noticed and started asking goldsmiths to store their coins and valuables for safekeeping too, paying a small fee for the service. In return, the goldsmith gave a paper receipt, promising the money was there and could be reclaimed on demand. Here's the clever part. People started trading those receipts directly instead of going back to collect the actual gold every time. If your receipt said you owned 10 gold coins and you trusted the goldsmith, why not just hand the paper to someone else as payment? That paper receipt was essentially the first banknote. Then goldsmiths figured out something even more powerful. Since not everyone withdrew their gold at the same time, they could lend out receipts for more gold than they actually had sitting in the vault and collect interest on those loans. This was the birth of fractional reserve banking, the system nearly every bank in the world still uses today. By 1694, this idea had grown so large and useful that England formally chartered the Bank of England, largely to help fund the government and stabilize the currency. It's considered one of the first modern central banks in the world. That goldsmith's receipt is a direct ancestor of everything you use financially today. Every time you swipe a card, check a banking app, or get a direct deposit, you're trusting a system built on that same core idea from 400 years ago. An institution holds your money securely and gives you a reliable record, now digital instead of paper, that you can trade, spend, or transfer. Modern deposit insurance, interest-bearing savings accounts, checks, wire transfers, even cryptocurrency wallets. All of them exist Because someone in 17th century London realized a piece of paper could represent trust as reliably as gold itself. The entire global financial system runs on a promise backed by a vault. That started with nervous customers handing coins to a man who normally just made jewelry. Here's one last fact to leave you with. The word bankrupt comes from the Italian phrase bancarotta, meaning broken bench, because medieval Italian moneylenders conducted business on wooden benches in public marketplaces. And when a moneylender ran out of money or committed fraud, an angry crowd would literally break his bench in public as a signal to everyone else that he could no longer be trusted. So the next time your card gets declined, just be glad nobody's coming to break your bench.